Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin trades at $64,974 this morning, Ethereum at $1,916, and XRP at $1.03 as markets digest a failed network split and key developments across the ecosystem. Bitcoin experienced a network split overnight when the BIP-110 soft fork proposal entered its mandatory signaling period at 6:34 a.m. UTC on August 9th. The proposal created a separate blockchain that quickly stalled after producing just 2 blocks. The dominant Bitcoin chain reached block 961,690, approximately 57 blocks ahead of the BIP-110 enforcing branch, which remained frozen at block 961,633 for over 8 hours. The enforcing branch's 2 blocks were both attributed to OC miners, while major pools including Foundry, F2 Pool, Ant Pool, Via BTC, and Mara continued mining on the dominant chain with zero support for the proposal. BIP-110 requires a 55% threshold to lock in, meaning 1,109 of 2,016 blocks must signal support. With 0 blocks signaling in the first 59 blocks and major hash power rejecting the proposal, the split represents a decisive miner boycott. Hyperliquid, the decentralized perpetual futures exchange, is experiencing a revenue paradox. Open interest reached $11 billion on July 13th, with 30-day volume near $178 billion. Yet gross protocol revenue has fallen for 4 consecutive quarters, from $357 million in Q3 2025 to $202 million in Q2 2026, a 43% decline. The revenue drop stems from BIP-3, implemented in October 2025, which allows anyone staking 500,000 HYPE tokens to deploy their own perpetual futures markets and keep up to 50% of trading fees. Builder-deployed markets grew from 2% of volume in early 2026 to roughly 50% currently. Real-world asset perpetuals have become dominant, hitting $3.6 billion in open interest and overtaking Bitcoin as the platform's largest market. Token buybacks fell from $290 million in Q3 2025 to $149 million in Q2 2026. Grayscale Investments withdrew SEC registration filings for 3 altcoin ETF proposals on August 7th. The Cardano, Hedera, and Polkadot ETF filings were pulled strategically, meaning Grayscale retains the option to refile these products if conditions improve. The Clarity Act faces another delay, as Senate Majority Leader John Thune scheduled a cloture vote for September 15th at 2:15 p.m. Eastern Time. Key sticking points include a bipartisan ethics proposal requiring President Trump to divest from crypto businesses and opposition from Senator Elizabeth Warren, citing insufficient investor protections. Bitcoin spot ETFs recorded $853 million in net inflows for the week ended August 7th, marking the strongest weekly total since mid-April. BlackRock's IBIT accounted for $693 million of the inflows. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.